What's up, everybody? Welcome to another edition of Dave's Daily Dives, where I, Dave Bartosiak, take a look at the stock charts of the day, take a look at the major market indexes, give you some key technical levels so that you can be prepped for your trading day. Now, normally I also dig in and find 5 Zacks Rank #1 strong buy stocks that are breaking out to new highs, but today I'm going to switch up styles a little bit, and I want to dig into the retail stocks and show a few of those names. So I'm going to do it a little differently, but hey, it's my show. I do what I want. So why don't we go ahead and get started here first with the NASDAQ Composite. So the story's been the same here. Just rally, right? Just rally mode. And I could zoom out and go as far as I want to go on here. We can go all the way to June. That's right, June of last year. And you can see that the NASDAQ has been on a tear since then. The good news is that a lot of this move has also been supported by earnings. And if you look at one of the pieces that Shiraz does here for us on the earnings preview that he does, and he always talks about what happened over the course of the last week and what's been happening over the course of the last quarter, you'll see that earnings are up like 13.9% year over year on the S&P 500, and then tech is even better. It's translated to that very well. So this has been supported. We've been in rally mode. Everything's been pretty much fantastic. A little different pattern than what you've seen from some of the other charts, which we'll go into a little bit later. But whereas most of them had sort of descending tops, didn't happen here. Had really came up to an all-time high, sort of had a little bit of resistance here, and we've since gapped through that and gone higher, and now you have 61.6987 on the NASDAQ today. All-time highs, continues to stomp on forward, really with no end in sight right now, and again, boosted by solid earnings there on the NASDAQ. How has that gone through to the other market indexes? Well, they've, for the most part, stayed in there, but you'll see that the pattern here is a little bit different, okay? And I talked about it before, and I know I sound like a broken record, but you had this sort of downward trend here in the S&P 500 that got broken to the upside, right? And then now the S&P is sort of reluctantly, he's an inch and it's how to get there, moving higher, right? Slowly but surely kind of moving higher. Broke through an all-time high yesterday. Today peaked above that level and then retreated intraday. So not a huge reversal intraday, nothing to worry about, and still, you know, very much in line. You have this sort of floor at 2380, because for basically since April 25th it was, the S&P 500 has been in, or was rather, in a 20 handle range. We have 20 handle days all the time. You're talking a 20 handle range for like 3 weeks. Not a lot of volatility. Of course, you didn't need me to tell you that, because you got this little old thing called the VIX, which has not been volatile at all and continues to show historically depressed levels. Here we are, 1065 on the VIX today. So again, just not a lot going on. And remember, what does the VIX measure? I know a lot of people say, oh, it's a fear measure, you know, volatility. Really what it is, it's a measure of the expected range of the S&P 500, and they use put and call options on the S&P 500 index futures in order to come up with that calculation, right? So it's basically the expected variance that they're seeing inside of that options chain, or a couple of different options chains, different expirations. And then, you know, put it all together, and what do you got? Boom, a VIX. So historically, very low levels here on the VIX. Haven't had a spike since mid-April, okay? This was actually heading into, this dip here was Easter Monday, I believe. So we had the day off for Good Friday, and then boom, bye-bye, volatility. Nobody had to worry about it anymore. In case you were wondering, even though the NASDAQ is leading the way, how is the Russell doing? The small caps of the Russell, typically another higher beta sort of index. Similar situation here. I've pointed out many times, with a series of lower highs being put in, and then they broke out to the upside. A little bit of a rope-a-dope here, because they got up to the all-time high, right? Broke out from all-time highs, gave you a couple of days where basically just flirted up there, and then now we're coming down, right? So one thing you can do here that I've done in the past, big fan of the fib retracements, so we can really just draw it from the low here to the sort of intraday all-time high there. Give you some perspective, and you can go ahead and zoom in on this. And I can set this a little bit better, I suppose, if I'm zooming in. Get a little bit more exact. Now, what I can do, if I really want to be finicky, is I can open up my little data box here in NinjaTrader and go ahead and take a look here at what's happening, you know, intraday, and then I can enter that here. And I don't want to have to do all that, okay? I'm being lazy today. That's okay. It's my prerogative. Again, it's my show. Switching up styles. All right. So back here again, the retracement really hasn't been too deep. It's gotten down below this 50%, but not with any real conviction. And so, I mean, these levels are just kind of soft right now, I would say. So the market's not, you haven't really seen a firm floor. I think this is a much firmer floor down here, sort of that 1375-ish area. I feel is going to be very firm support on the Russell. So if we do get down there, expect to see some buyers step in. But for the most part here on the Russell, Chop City in the near term. One thing that's not been Chop City, I'm getting ahead of myself. There's a couple of things. One, risk off with the dollar yen, okay? You guys remember the dollar yen, right? Again, let's go back to the fibs. Big fan of the fibs, so let's draw the fib. Boom, bam. And again, guys, well, you could have made it better. I know. So, similar situation, though, with this series of lower highs being put in. This broke out to the top side of that trend line. Immediately challenged the 23.6% fib retracement of this low to this high and started to run out of gas a little bit. So you're kind of wondering in the near term, is there a chance that this dollar yen gets back down to 112? I sure thought so. Today, though, this is an interesting sort of day. Looks almost like a reversal, but did kind of run out of gas, just shy of yesterday's highs. So that's very important, okay? But if you're looking for a level tomorrow to worry about on the dollar yen, not so much worry about, but to keep an eye on, it's the previous high from the other day, right? So that's what you got to take a look at. Now, the other part I want to look at is gold, right? Because gold has been basically tracking in the opposite direction of that, and this is what we're seeing in the gold chart. So another situation where I'm zooming out too far, where the gold prices are going to move basically in the opposite of that dollar yen. So that relationship, though, is breaking up a little bit, which is surprising to me. Don't want to rush through this, but again, this is not the center of my conversation here today. Today, I'm talking about retail. So one chart I want to look at is XRT, which is the Spider Sector Retail ETF, I believe. And you'll notice retail's come under some pressure here lately. Specifically since, what day is this? The 10th, right? So that puts us, last week was the high. And then you got the 12th as the first major sort of dip to the downside. So, it's almost if some kind of earnings report happened last week that caused selling to happen in retail. Now, let me tell you, I cover a lot of these stocks in Live Trader, so I know all about what happened. First, Macy's happened. And Macy's gapped down, the bottom fell out, and whoever tried to catch this knife, your name is now Stubbs, because this thing just kept going down and continues to drop. So there's Macy's, culprit number one. Culprit number two, good old Nordstrom. Now, Nordstrom dropped down on the day of Macy's, and me, foolishly, I was like, I mean, it's pretty much cooked in. Like, how bad could it get? I didn't think it was that terrible a report. Nevertheless, gapped down on earnings. And this is another stock looking for a bottom. Where's the bottom? We don't know. New bottoms, new lows, right? So now, what else? What else is on the horizon? You've got a couple of things. Remember, you've got Target. This is a big one. They're going to be reporting before the bell tomorrow. One thing to point out about Target, gaps, right? Bad gaps. Not good gaps at all. Well, I guess this is a happy gap. but most of them just bad gaps. And if you notice, these bad gaps never got filled. So these are just major holes, and the pressure was there on target, never got back over the last couple of quarters. So what am I expecting out of target? I'm expecting a gap. And honestly, if this gaps, look out below, because you're talking multi-year lows on target. If it gaps down, it has a good report, then it's got to get back to this area, right? It's got to get back in the 60s. So that was target. And then the other one, the big one, Wal-Mart. Now, Wal-Mart still came under pressure here today. Hasn't really had the negativity like some of the other retailers, nor should it really. But just something to keep in mind because they've got earnings coming up right around the corner also. So some big reports out of retailers, and that could, again, put further pressure on XRT. And I think, really, if it gets ugly, we could easily retest the lows of March at 40.50, if not getting closer down to this sort of 39.50 level. Much lower, a lot more to go here. Okay, so thanks everybody for checking me out. Remember, if you haven't already hit me up on Twitter, it's at Bartosiastics, BARTOSIASTICS. So thanks for hanging out with me here from Zacks.com. It's Dave Bartosiak signing off. I'll see you guys mañana.